Hello everyone, welcome to a product review at Finominal. In this video, we are going to debunk the Franklin India Prima Fund. This fund primarily focuses on investing in mid-cap companies. It's managing about a large AUM of 11,000 crores and it is charging an expense ratio of close to 1%, which is on the higher end, even when you take a lot of mid-cap active funds out there, and definitely a lot higher than passive mid-cap fund. So as always, we start off the analysis with the benchmarking the performance of the fund to its appropriate benchmark. So since it's a mid-cap fund, the tool automatically suggests you a proper benchmark, which is the mid-cap 150 total return index. And this clearly tells you a story here, right? That the fund has consistently underperformed its benchmark, and you can also see the cumulative excess returns of the benchmark itself. So what this analysis tells you is that this fund has failed to beat its benchmark. And mind that it's managing lots of money, right? Like 11,000 crores of money for underperforming the benchmark, and it's charging about 1%, which is on the higher end. Now, we will get into the return-based factor exposure analysis, which tells you another story. The story here is that this fund is not, by its name, is not called a mid-cap fund. So how, even without reading the objective of the fund, how do you know what kind of style exposures this fund has? So this is where the decomposition of the returns, the decomposition of the risk comes into the picture. So here, the factor exposure analysis, if you see the right chart here, it tells you a story here, right? The size factor, the blue line that you see here, has been consistently positive and has gone to as high as one. This is the beta exposure that we are talking about, right? So even without understanding, or even without reading the objective, or even reading the name of the fund, you can clearly with confidence say that historically and even till now, the fund has had heavy size exposure, that is small and mid cap exposure. You can also see a consistent low volatility exposure, and recently the quality exposure has gone up. We have also decomposed it into risk sources, which adds up to 100%, right? So for example, if you take 2014, where is the risk coming from, right? 50% of the risk is coming from the equity market, which is the Nifty 50, which is not surprising because this is an equity product, right? And the rest of the returns, the risk, is coming from the equity factors. And what are those equity factors, right? So here in the blue, we are calling it as equity factors. And in the right chart, we have decomposed what this rest of the 43% is, right? So out of the 43% that we are showing here, about 35% of the risk is coming from size factor. Again, this is a mid-cap company, right? A mid-cap primarily focuses on mid-caps, right? And you can also see, so the above analysis is on a 1 year rolling basis, right? So this is on an annual basis, but also you take a look back of 1 year. And here, this is throughout the history of this fund, that is the last 12 years. Again, you can see a consistent size exposure. So this tells you that the fund historically and even till now has had a heavy size exposure, which is not surprising because it's a mid-cap fund, right? Primarily focuses on mid-cap. When it comes to the outperformance of the fund itself, right? Like we saw in the excess return chart as well as in the performance chart, this fund has failed to outperform its benchmark, which can be seen in the outperformance consistency, right? The fund has only outperformed out of 7 years, only 2 years it has outperformed its benchmark. And you can also see that in the outperformance chart here. You might ask, hey, why is the alpha positive here, right? So the alpha doesn't include, so the outperformance is to the appropriate benchmark, right, which is the Nifty Midcap 150 total return index, and like we saw, it has consistently underperformed. Whereas the alpha doesn't have the Nifty Midcap 150 index in itself, right? The alpha consists of the passive exposures, like we saw here, the asset class exposures and the equity factor exposures. So when you compare it to the passive exposures, like the asset class and the equity factor, it has given you alpha, but when you take the benchmark into consideration, it has failed to outperform its benchmark. Then we go on to the market capitalization, just to double check what this fund is primarily investing in, right? So this is a mid-cap fund, so it is investing about 65% in the mid-cap companies, but also you have a bit of exposure to large cap and also about 18 to 20% in the small cap as well. So it's very important to understand the market capitalization, especially in India, right? Because there are a lot of funds which might tell one thing in the objective of the fund, but when it comes to the market capitalization, it might be completely different as well, right? Finally, we will get down to how this fund, what are the other alternatives to this fund, right? This is in the mid-cap space. Obviously, there are a lot of active mid-cap companies active mid-cap funds out there that can help you in reducing the fees, but also in outperforming this fund, right? So we have come to the fee reduction part of this analysis, where we will show you similar exposure funds, that is, funds that gives you mid-cap exposures, that is the size exposure, but with lower fees. So if I go down, you can see the list of funds here, right? And primarily these are like all mid-cap funds. So you can see Baroda mid-cap fund, you can see Axis mid-cap, you can see White Oak Capital mid-cap fund. So there are like 3 mid-cap funds here, right, which all charge 50% lower fees. But when it comes to the performance, there are certain funds that even outperforming Franklin India Prima Fund. So for example, White Oak, right? White Oak charges about 0.43%, but it's outperforming Franklin Prima Fund, right? So it is charging 50%, even 60% lower fees, and it's able to outperform its the Franklin India Prima Fund. You can also take this just to analyze this, quite in depth. We can take this to asset comparer just to wrap this analysis. So I've taken like 4 funds, right? So one is the Franklin India Prima Fund and 3 competitors, right? So you can see that pretty much all the funds are close to each other. The Axis Midcap and the Baroda Midcap, they're charging lower fees, but also like as underperformed Franklin Midcap. But going forward, this can also be outperforming the Franklin Midcap, right? The main thing about these 2 funds is that it's charging significantly lower fees, right? And also White Oak, even with very low fees, it's able to outperform consistently the Franklin India Midcap fund. We can also add the Nifty Midcap 150 TRA index here. Just to make this analysis more comprehensive, right? How this all these competitors, all the mid-cap active funds compared to its benchmark itself, right? So the benchmark is here, right, in India, the Nifty Midcap 150 TRI, and you can clearly see that it's almost like tracking the index here, but you're paying 1% for the Franklin India Prima Fund. And from this entire performance chart, what I can conclude is almost all the funds are close enough that you can just replace it with the Nifty Midcap 150. And the fees it's charging, the passive is just much significantly lower, right? Like it's 0.2% compared to Franklin India, it's around 1%, right? The fees is completely It's just a huge reduction in fees, and also you're getting you're getting same exposures, right? Which you can verify it using again factor exposure analysis, right? You can get the equity factor exposures here, but more importantly, since it's a mid cap, right, you also check for the size factor exposure. I think that concludes this analysis. What we have learned in this analysis is that this fund is primarily focusing on investing in mid-cap companies, but it has failed to outperform its benchmark. It's charging a huge expense ratio of 1%, but still, it has failed to outperform its benchmark. But also, there are other alternatives to this fund, right? Mainly the White Oak, which is charging 50%, 0.5% lower expense ratio, but it's able to outperform its benchmark. And overall, the conclusion is also that the Nifty Midcap 150 total return index by itself is like a big replacement for all these active funds, because I couldn't see a massive outperformance in this category, where you can get the midcap index fund for 1/10 of the cost. That's it for this video. Thanks a lot for watching. See you next time.